Welcome to episode 22 of the Tax Smart Daily, a daily video series for real estate investors to learn about saving money on taxes and staying out of trouble. I'm Brandon Hall, and before we get started, I invite you to join our Facebook group and our Tax Smart newsletter. Links to both of those are in the description of this video. Additionally, if you have any comments or questions, please drop me a line in the comments below. I love engaging and interacting with the community. Lastly, please subscribe to the channel. I don't want you to miss any future videos that we drop. We've got the daily video, the podcast, live Q&As, all really important stuff for real estate investors. Today's topic is the excess business loss limitation. It's under section 461L. Now, the excess business losses came into effect with the 2017 Tax Cuts and Jobs Act, but the CARES Act of 2020 delayed the implementation of section 461L until 2021. So now, starting January 1st, 2021, we all have to be aware of this little provision that limits excess business losses. Now, who cares about this? Anybody that's investing in real estate should care about this. You should be very well aware of how the excess business loss limitations come into play for you. What is an excess business loss? An excess business loss is any loss in excess of business income. So I run my firm, and let's say that I net $100,000 from my firm. And then let's say that I have $90,000 of rental losses that are non-passive because my spouse is a real estate professional. The $90,000 of non-passive losses nets out against my $100,000 of income, business income, and I'm left with a $10,000 business income. So no issue, no excess business losses. But let's use that same example. Let's say I have $100,000 of net business income coming in. My spouse is a real estate professional, and we have $110,000 of rental losses that are non-passive. Now, when I take that $110,000 loss and I offset my $100,000 of business income, I have a $10,000 excess business loss. Let's say that I have a W-2 job, so I don't have any business income, and I have that same $110,000 rental loss. My spouse is a real estate professional. The rental loss is non-passive as a result. If I have W-2 income and I don't have any other business income, and then I have a $110,000 rental loss, that's non-passive, not passive. Passive, different rules. That's just going to get suspended and carried forward, no big deal. But when it's non-passive, when I qualify or my spouse qualifies as a real estate professional, when we collectively materially participate in the rental portfolio, or if I'm running the short-term rental game, if I create non-passive losses, then that's when I have to start paying attention to this stuff. So I've got $110,000 of non-passive rental losses. I have $100,000 W-2 income, no business income. Since my business income is zero, then I have $110,000 of excess business losses. Okay, so any loss, any business loss in excess of business income is an excess business loss. Any dollar over the business income threshold. So where is this an issue? Well, the limitation is $250,000 for single filers, $500,000 for married filing joint. So let's say that I earn $1 million in RSUs. I'm out in the tech world and I'm getting paid in RSUs or stock options, or I make $1 million trading Bitcoin. How do I offset that? Well, one way is to buy rental real estate, qualify as a real estate professional, materially participate in the activity, convert that rental loss to a non-passive loss, and then use that non-passive loss to offset the income that I just described. But because the income that I just described, the portfolio income, the RSUs, the options, the W-2 income, none of that's considered business income. Because none of that's considered business income, my rental losses are capped at $500,000 if I'm married filing joint. If I'm single, it's capped at $250,000. Anything above those thresholds just gets carried forward. So if I make $1 million as a physician, let's say I'm a W-2 physician, I make $1 million as a W-2 physician. I go out and I buy rental real estate. My spouse qualifies as a real estate professional. We get $1 million. Let's call it $900,000 just to make it even easier. We get a $900,000 loss. Maybe we invest in partnerships and all that stuff, and they, collectively a $900,000 loss. We're able to make it a non-passive loss. And because it's a non-passive loss, we can utilize that to offset our income. Well, if the income that I have is not business income, I've got $1 million of W-2 income, being a surgeon of some sort, and then we go out and we create a $900,000 non-passive rental loss, we can only use $500,000 of that non-passive rental loss because we don't have any other business income. Therefore, the $900,000 loss is all considered excess business losses, and it's capped at $500,000. All of that starts in 2021, so you've got to be really well aware of this. Now, it's capped at $500,000 this year. The remaining $400,000 in this example carries forward. I can tap into that in future years, so it doesn't go away. It just means that I can't claim the entire $900,000 today. So if I'm a physician in this scenario, what do? Well, I try to find a way to convert that $1 million of W-2 income partially or wholly into business income. So I either need to be a partner in a partnership, and that $1 million needs to be K1 income, or I need to be like receiving 1099 income, something along those lines. But all of that has tax consequences too. So you really need a holistic understanding of your total or your holistic tax position before you just go and start changing things up simply to drive rental losses and be able to use those rental losses. So don't just go out and start switching everything to 1099 or creating partnerships. All of that, you got to be really careful with that stuff because it has tax consequences too. But I do want to make you aware that if you don't have business income and you're creating huge rental losses, you might be capped. Now, if I had $1 million of business income in this example, so let's say that $1 million W-2, let's say that it was K1 income, pass through K1 income, just straight up profits, like it's $1 million of it. So I've got $1 million of profit or $1 million of 1099 income. If that's the case, then I have business income. The $1 million is business income. So if I then go and create the $900,000 of loss, then I can use the entire $900,000 of loss, and not non-passive loss, because the $900,000 of loss is not in excess of my $1 million of business income. If I had $1.4 million of loss, now I would be able to use the first $1 million, no problem, because it's just offsetting my business income. The remaining $400,000 I would still be able to use in this example, assuming again that I make $1 million of 1099 or some sort of business income. I can still use that remaining $400,000 because it's under the $500,000 of excess business losses. But if I make $1 million business income and then we have $1.6 million of loss, of rental loss that's non-passive, then I can use only $1.5 million of that loss. The first $1 million to offset my $1 million of income, business income. The next $500K excess business loss, but then that's the limitation. So the remaining $100,000 of this $1.6 million loss is excess, and it's beyond that limitation. So it just kicks out, carries forward into the future, and I can use that at some point in the future. You've got to be driving some pretty large losses, but it's definitely something to pay attention to starting this year and going forward into the future for any of our higher income earners out there. Hope you enjoyed today's episode of the Tax Smart Daily. Please drop a comment, question, engage with me in the comments. I love it. And follow us online. We've got a whole bunch of links to our social media and our communities, but definitely join that Facebook community. It's popping. Thanks so much. See you tomorrow.